Welcome back to XRP Update, everybody. Today's video is probably the most critical breakdown we've done in a long time. Why? Because behind the scenes, some massive coordinated power moves are happening right now involving Wall Street, US regulators, international central banks, and XRP itself. And here's the crazy part. Most retail investors are completely blind to what's quietly building underneath the surface of this market. They're staring at the 1-minute candle charts, panicking over a 2-cent drop, while the biggest financial entities on Earth are moving institutional chess pieces into position. Before we dive into the data, let me ask you a serious question. What if the biggest move for XRP hasn't even started yet? What if institutions are purposely keeping retail confused so they can quietly load their bags before the public catches on? Think about it. Today, we're going to pull back the curtain on why major financial players are suddenly changing their behavior, why global legacy banks are sweating over upcoming regulatory deadlines, how the shift to tokenized finance is reaching a tipping point, and why XRP keeps showing up at the exact center of these institutional closed-door meetings. Trust me, by the end of this video, you're going to look at your portfolio and the entire crypto market completely differently. So, grab a coffee, sit tight, and make sure you stick around till the end because we are connecting dots today that most people are completely missing. Before we jump in, do me a quick favor. Smash that like button, subscribe to XRP Update, and drop an X in the comments below to support the channel. Let's get straight into it. Right now, market emotions are all over the place. Bitcoin volatility is back, macro pressures are weighing down on risk assets, inflation fears are resurfacing, and retail traders are panicking, thinking the sky is falling. But seasoned investors know one universal truth: confusion and fear create the absolute best entry points. Let's look at how the market actually works. Crypto historically moves through emotional phases: excitement, greed, denial, panic, depression, and finally strategic accumulation. These cycles repeat over and over because human psychology never changes. Right now, we are in that classic emotionally divided phase. While retail traders are arguing on Twitter or panic selling their positions during market dips, smart money is doing the exact opposite. They don't buy when the green candles are exploding and the hype is at its peak. They accumulate strategically when the market is boring, consolidating, or fearful. Over the last few months, blockchain data shows that giant financial firms are quietly reshaping their crypto portfolios. They are cutting down on speculative meme coins that rely purely on hype, and they are doubling down on real-world utility assets. And that is exactly where XRP enters the chat. Love it or hate it, you cannot deny that XRP is always linked to global banking infrastructure, liquidity systems, and cross-border settlement technology. That's not a coincidence. I see so many people waking up every day, refreshing their apps and asking, why isn't XRP at $10 yet? Or, why is it moving so slow compared to this or that token? But markets don't move on retail hype anymore. Those days are slowly fading. The market is maturing, and it is now being driven by institutional confidence, liquidity pipelines, and structural adoption. Let's talk about the massive elephant in the room that the mainstream media isn't talking about enough: asset tokenization. Right now, discussions around tokenizing real-world assets, everything from real estate and commodities to stocks and government bonds, are absolutely exploding. Major players like the New York Stock Exchange, traditional legacy banks, and massive hedge funds are openly planning for 24/7 financial markets operating on blockchain-based settlements. Think about the scale of what we're talking about here. Traditional finance is running on tech that is decades old. The SWIFT network, which banks use to move money globally, was built in the 1970s. International wire transfers still take days to fully clear. Markets close at 4 p.m. and stay shut over the weekends. Settlement processes are slow, inefficient, and full of middleman fees. It makes zero sense in a world where you can send a high-definition video across the globe in 1 second. Blockchain fixes all of this. But here is the multi-trillion-dollar question. If global finance transitions to a 24/7 tokenized system where trillions of dollars worth of assets are moving across different private blockchains, how do these systems talk to each other? How do you move value instantly between a bank in New York and a bank in Tokyo without holding massive pre-funded accounts in local currencies all over the world? You need a neutral, high-speed bridge asset that can provide instant liquidity. That is exactly what XRP was engineered to do from day one. Ripple's on-demand liquidity, or what they call Ripple payments now, uses XRP to bridge two different currencies in 3 to 5 seconds for a fraction of a cent. When you look at tokenization through this lens, you realize that XRP isn't just a digital currency, it's the underlying plumbing for the future financial system. Now let's pivot to the political side of things, because the regulatory environment in the United States has been a wild roller coaster. For years, the biggest roadblock preventing big institutional money from fully diving into crypto has been legal uncertainty. Wall Street compliance departments hate guessing games. They refuse to risk billions of dollars in a market where the rules can change based on an agency's mood. What's fascinating is that the harder anti-crypto politicians push back against the industry, the more institutional interest seems to grow. Look at the recent developments surrounding the Clarity Act and the behind-the-scenes discussions in Washington. Insiders are suggesting that the aggressive anti-crypto narrative is completely backfiring. Instead of suppressing the industry, it has forced lawmakers to realize that if the U.S. doesn't create a clear, structured playground for digital assets, the rest of the world will leave them behind. Ripple has spent years fighting these regulatory battles head-on, spending over $100 million in legal fees to secure legal clarity for XRP. While hundreds of other crypto projects completely vanished or surrendered during past regulatory storms, Ripple kept building globally. They expanded payment infrastructure, locked in central bank partnerships, and secured licenses across Europe, the Middle East, and Asia. That long-term grit and legal survival is exactly why seasoned XRP holders aren't sweating short-term price dips. XRP stands as one of the very few digital assets with distinct, battle-tested legal standing. We saw the exact same pattern happen with the internet in the late 90s. Traditional media and legacy politicians mocked it, called it a haven for illegal activity, and tried to slow it down with heavy-handed regulations. But the technology was simply too efficient to ignore. Crypto is moving along that exact same trajectory right now. While the West has been slow and hesitant, the East is already steps ahead. And this is one of the most overlooked parts of the XRP thesis. If you've been following XRP for a while, you know that Japan has always been Ripple's absolute stronghold, largely thanks to Mr. Yoshitaka Kitao and SBI Holdings. The big news developing right now is that Japan's largest brokerage firms and megabanks are actively preparing crypto investment products aimed directly at millions of retail and institutional investors. You have to understand that Japan has one of the most conservative, tightly regulated financial systems on the planet. They do not chase trends blindly, and they do not do hype. So when Japanese financial giants build crypto infrastructure, it means they see serious, multi-decade structural value. Rumors and reports regarding future Bitcoin and XRP-focused products entering the traditional financial markets over there are getting very serious. And the best part? Ripple isn't trying to enter Japan or Asia from scratch. They've been on the ground building deep relationships, joint ventures, and payment corridors for nearly a decade. When global liquidity shifts, it flows through the path of least resistance. With established regulatory clarity in Japan and a pre-built banking network running on Ripple tech, XRP has a massive, unfair head start over almost every other digital asset in existence. While other projects are trying to figure out how to get listed on exchanges, XRP is already integrated into the commercial banking roadmaps of major Asian financial hubs. Now let's look at the actual data on the charts and derivative markets, because numbers don't care about anyone's opinion. Despite the broader market volatility and periods of heavy price suppression, we are seeing consistent, steady inflows into XRP-related investment funds and institutional products. This is classic smart money behavior. Retail investors wait for a massive green candle, get excited when the price pumps 30%, and buy at the top due to FOMO. Institutions do the exact opposite. They buy when the asset is moving sideways, when the market is boring, or when retail traders are complaining that the coin is dead. They accumulate quietly behind the scenes through OTC desks, so they don't move the spot price prematurely. Look at the broader macro picture. Yes, Bitcoin faces sharp corrections, and macroeconomic issues like interest rate policies and inflation data create short-term market dips. But look at what the mega firms are doing during these dips. Look at companies like MicroStrategy or the massive asset managers behind the crypto ETFs. They are vacuuming up billions of dollars worth of digital assets on every single drop. Why? Because they realize that crypto is no longer a speculative tech experiment. It is a new asset class that is being permanently integrated into the global financial system. The next major bull cycle isn't going to be fueled by retail hype, meme coins, or temporary internet trends. It is going to be fueled by massive institutional utility and institutional liquidity. And since XRP's entire ecosystem was literally engineered for institutional liquidity and high-volume cross-border payments, it stands in a prime position to capture an enormous slice of that pie. Finally, we have to look at the massive demographic and generational wealth transfer that is happening right now. Legacy financial systems were built for a generation that preferred physical paperwork, local bank branches, and slow, centralized oversight. But the world has changed. Millennials and Gen Z investors are entirely comfortable with digital assets, instant global transactions, 24/7 decentralized platforms, and tokenized networks. They do not want to wait 3 days for a bank transfer, and they don't want to pay ridiculous fees to move their own money. As trillions of dollars transfer into the hands of this digital native generation over the next 10 years, financial behavior is going to transform completely. Wall Street knows this, central banks know this, and that's why they are frantically building the infrastructure right now, even during market downturns. XRP sits in the most unique spot in the entire industry because it serves as the ultimate bridge, right between cutting-edge decentralized crypto technology and traditional legacy finance. It doesn't aim to destroy the banking system, it aims to upgrade it. That is why this community is so incredibly passionate, despite years of price manipulation, legal drama, and market FUD. Of course, let's keep it real. This does not mean prices are going to explode to thousands of dollars tomorrow morning. Markets are volatile, macroeconomic headwinds are real, and nothing moves up in a straight line forever. One major mistake many crypto influencers make is promising impossible, overnight price targets just to get clicks and views. That creates bad expectations and leads to emotional investing. Real wealth is built on patience, structural understanding, and identifying long-term global trends before the rest of the world catches on. The macro trend here is undeniable. The global financial architecture is being rebuilt from scratch, and XRP is already woven into the new foundation. So let me leave you with this final thought today. If global finance fully transitions to a digital, tokenized, 24/7 settlement infrastructure over the next few years, where do you realistically see XRP standing by the end of this decade? Will it become one of the most widely used utility assets in financial history? Or do you think a different technology will step in? Drop your honest predictions and thoughts in the comments below. I want to see what the community thinks about the macro picture. If you found real value in today's deep dive, please smash that like button, subscribe to XRP Update, and turn on those post notifications so you never miss our daily market breakdowns. Stay safe out there, avoid emotional trades, protect your capital, and I will see you in the next update.